our extra candlesticks, the first one that we're going to be looking at is called the pin bar. So it's a hammer when it's in a bullish market, and it's a shooting star when it's in a bearish market. So as you can see right here, the hammer candlesticks is created when the open, the high, and the close are roughly at the same price. So all these three will be roughly at the same price. As you can see right here, we have our open, we have our close, and the high. So the high here didn't actually have an upper shadow or anything. It just closed directly at the same as the closing price. So it is also characterized by a lower shadow that indicates a bullish rejection from the buyers and their intention to push the market higher. So this candle right here actually reached here, but then it was rejected and it closed above the opening price, making it a bullish candle in this instance. But a hammer can also be a bearish candlesticks, but it just has to be have a longer tail. So the hammer is a reversal candlestick pattern when it occurs at the bottom of a downtrend. So the candlestick forms when sellers push the market lower after the open, but they get rejected by buyers so that the market closes higher than the previous lowest price. And then on the other side, we have the shooting star right here. So the shooting star, which is in a bearish market, so it's exactly the opposite of this candle. But the shooting star formation is confirmed when the open, the low, and the close are roughly at the same price. So as you can see right here, we have our open, and then we have our closing price, and then we have our low price right here, being indicated by that small lower shadow that we have there, if you can see it. So that is our lowest part, right? And then we have the highest part, which also shows the top of the upper longer shadow right there. So this candle is characterized by a small body and the long upper shadow. So it is the bearish version of the hammer, and the shadow should be twice the length of the real body. So just as we said about this one as well, so this shadow right here needs to be twice the length of this real body right here. So when this candlestick forms near the resistance level, so resistance, remember, is the line that stops the market from pushing up. So it can be here, it can be there, it doesn't really matter where it is, but it should be a point where the market is struggling to push through, to go above or below. So when this candlestick forms near the resistance level, it should be taken as a high probability setup. Buyers try to push the market higher, but got rejected by selling pressure. So they got rejected by the selling pressure. So the sellers gained a bit more momentum over the buyers. So the next one is called the harami pattern, which is the inside pattern. So the inside bar. So why we call this an inside bar, as you can see right here, it's actually the next candle needs to be inside the first candle. So it's almost like the opposite of an engulfing candle. So engulfing candle, remember, we had this candle right here on this side, but now this one is now longer candle on this side or before the shorter body. So it's almost the opposite of that, but basically this is where we have the mother candle and the smaller candle. As we said, harami is direct translation of pregnant in Japanese. So it's considered as a reversal and continuation pattern and consists of two candlesticks. So the first candle is a large candle, and is also called the mother candle, followed by the smaller candle, which is called the baby. So for the harami pattern to be valid, the second candle should close outside the previous one. As you can see, it closed above with the opening price above the closing price of the previous one. So the candlestick is considered as a bearish reversal signal when it occurs at the top of an uptrend, and it is bullish when it occurs at the bottom of a downtrend. So it will either in two different forms. As you can see, this is the bullish at the bottom of a downtrend, and then at the top of an uptrend it will look like this, something like this. So the market will be being pushed up, and then it will be an uptrend, and then so the market is being pushed up, and then all of the sudden this occurs, and then it's now a bearish inside bar, and this will be a potential selling opportunity. But remember, you always need other tools for you to confirm these opportunities right here. So the smaller body is totally covered by the previous mother candle. Don't bother the colors. You don't have to worry about the colors that much, but the most important part is that the smaller candle, the smaller body closes inside the first bigger candle. So the harami candle tells us that the market is in an indecision period. This is also called consolidating. So buyers and sellers don't know what to do, and no one is in control of the market. So when this candlestick pattern happens during an uptrend or downtrend, it is interpreted as a continuation pattern, which gives a good opportunity to join the trend. So when this candlestick pattern happens during an uptrend or a downtrend, it is interpret it as a continuation pattern, which gives a good opportunity to join the trend. If it appears at the top of an uptrend or at the bottom of a downtrend, it is considered as a trend reversal. So as we said, you'll be looking for this or that. So it just depends on the market structure. So it can either be a continuation or a reversal pattern. It depends on where it is actually occurring on the chart, right? Okay, so congratulations on making it far into this lessons, into this course. So now we have actually touched all on the candlesticks that you need to understand for you to be able to trade this market. So make sure that you have the basic understanding and you understand the psychology behind the forming of these candlesticks, because once you understand that, that is really the most important part of this. So now following with our next lessons, we're actually going to be looking at the market structure and how to make use of these candlesticks and everything that you have learned so far into actually trading. So I also put it together with other technical tools so that you can make the most out of everything. So the next lesson is going to be about market structure. So let's get started with that.